Hello everyone, very nice and simple video today. We're going to be taking a look at the S&P 500, the NASDAQ, the Russell, the dollar, and the bonds. We're going to take a look at what the next steps are for the market and how everything is going to go moving forward. All right, so without further ado, let's get started with the video. All right, so number one, the dollar is very, very important to take a look at. And the reason for that is because the dollar has an inverse relationship to the market. If the dollar is strong, then that means that the overall market should be falling. Okay, so clearly, what ended up happening was earlier in the morning, the dollar was very, very green, but the indices had gapped up. So the fact that the dollar was showing this much strength above levels of resistance, etc., right? But the indices, meaning the stock market, so the dollar was strong, but the stock market was also strong. So this was a good indication. This was a good indication that the stock market should have also fell. Okay, so that's why we ended up going short as we gapped up, and the dollar basically was a good tell for that. All right, so now we're going to take a look at the bonds, because the bonds are also very, very important to take a look at. So the bonds are important to look at as well. And the reason for that is because they have a more correlated relationship to the market. So this is a chart of 30-year bonds. If the bonds are strong, or if the bonds are weak, then the overall stock market is also going to be weak. So we have a huge red candle here from the bonds. This candle, so basically we had a huge red candle on the bonds, a huge green candle on the dollar, and the stock market was still up. So basically, this pointed at more bearishness for the stock market, because the bonds were extremely, extremely weak and the dollar was extremely strong. So basically, this is not looking good. Obviously, the momentum on the bonds is bearish. The momentum on the dollar is bullish. All right, so let's go ahead and take a look at the rest of the indices. All right, so clearly right now we had a big gap up on the market, and basically, the dollar was very strong. The bonds were very weak, and the market gapped up. Right. So with that being said, it was a good opportunity to buy into long-term puts, and we did that. And basically now we're just holding on to these puts, and we're expecting more downside on the SPY. Right. And now the issue though is going short here, because we're at a level of support. So this can easily, chop around and everything like that, but overall, the momentum, this is not a bullish setup at all. I was telling you guys over here, the fact that this setup came was also not bullish at all, but we had an impulsive move to the upside, and this gave a much better opportunity to go short. And yeah, so we took this, and now I also want to take a look at Apple. So what we ended up doing on Apple was we took a loss on Apple because we gapped up, and I didn't want to hold past a certain percentage loss. So what we did is we sold Apple, and then we ended up buying SPY puts shortly after we sold Apple. So obviously, Apple looks like it's breaking and closing below this trend line, but what we need to see is another big move down. And if Apple can give a big move down, we could see on the MACD on Apple also that this MACD line is barely moving downwards. So once Apple really cracks lower, the MACD line is also going to be a bit more sensitive to the downside as well. So that should bring more weakness to the market. And then taking a look at the NASDAQ here, right? The NASDAQ is also very clearly at support. So going short here on the NASDAQ or the SPY is difficult because we're in a support zone. And basically also, the MACD line, you can see that it's barely moving here. We gapped up. We basically closed almost at the exact same place as yesterday. So this MACD line didn't move too much, but this is setting up for a huge crack to the downside. But the issue, once again, is that when it does set up for a big crack to the downside, if we're at a level of support and we have not broken below it, then it becomes difficult and more dangerous to add to shorts here. It was much safer and better to add to shorts up here. So now, you know, what we want to see is a retest down to this trend line here on the NASDAQ, close to 363, 366 area. That's basically what we should be seeing, you know, over the course of the next like week. We should see 370, 369 area on the NASDAQ. But going short down here at the support above 375 is difficult. So what we need to see is hopefully overnight we get a big move to the downside, or we get some sort of setup where we bounce a bit intraday and then we just like capitulate and just sell and completely break below the support. So that, you know, this move to the downside could end up happening later, but you know, at the moment it's difficult to go short once again because we're at a level of support. So yeah, so there's that for the NASDAQ. So now taking a look at the IWM. The IWM actually showed the most weakness, and we closed below the recent lows, right? But also, again, you know, the IWM came to an exact prior level of resistance. So the IWM basically just needs to close below 192.50. And if that can happen, that would basically coincide with more weakness in the overall market. The S&P 500 would fall, Apple would fall, and Apple, basically, if Apple gets another move to the downside, if the IWM breaks below this as well, because the IWM is a big reason why the market, the IWM is a big reason why the S&P 500 shows strength. So on days where the NASDAQ is very red, if the Russell, right, if the IWM is green, then the SPY, instead of being super, super red, the SPY might be slightly green, or it might be slightly red. Okay, it wouldn't be as red as the NASDAQ because of the strength in the IWM. So if the IWM continues falling lower and breaks below 194.50, and then if Apple gets another move to the downside below the trend line, then that would be much better. And basically what we need to see right now is if they're going to reward late bears, basically, because going short down here is you would basically be a late bear, and you're hoping that downside would continue, but it's difficult. It's difficult to do because it's the equivalent of going long at a level of resistance. You never want to go long at a level of resistance. It's not safe. Similarly, you should not be trying to go short at a level of support. So unfortunately right now, because of the big move to the downside that we saw in the bonds, there could be a bit of a bottoming out on the bonds, which could lead to a small bounce in the market. And again, you know, going short over here overnight, there might not be a move to the downside. We could open flat or slightly green. From there, we could retest back up to 455, and then 455 would be a very, very important major 450, 450 would be a very, very major level of resistance that if we end up breaking back above and closing above 455, then the market could just hold this level as support and we could just continue up. And then especially if we get a close back above 457, then definitely it would be very, very interesting to see where the dollar and the bonds would be after, if we get a close above 457. All right, so I hope this makes sense. Overall, you know, we're short on the market. We're expecting it to fall down a bit lower, and that is currently my bias. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.